Happy Friday, traders. It is Friday, the 26th of June, 2015. It's 8:01 a.m. Chicago time. Always and forever, thanks for joining me. I keep needing to remember to say that. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight news, we still have the focus on Greece with the Eurogroup meeting tomorrow. Big day tomorrow. Decisive weekend as IMF repayments due and bailout agreement runs out on Tuesday. Markets exhibiting calm before the storm sentiment. Summit for Eurogroup leaders not going to take place today for lack of progress, and all the pieces are expected to come together tomorrow. Japan May CPI rises for the 24th straight month, but at a 2-year low at 0.5 versus 0.4 estimated. May unemployment matches 18-year low at 3.3%. It's very low. China's Shanghai index, composite index, is down 7.44% in the largest one-day fall since 2007. Which is vastly approaching bear market territory, having fallen 17% in 2 weeks. The Shanghai Composite Index down 17% in 2 weeks. Just amazing. Not much else on deck as far as the news. The S&P fair value is negative 8.1 today. And looking ahead at what's expected, we're looking at really the only release that is of value today is at 9 Central, a half hour after the open. We're looking at University of Michigan sentiment June final at 94.6 expected, 94.6. And then the rest of the day we have, ICRI Weekly and Baker Hughes, which really don't count for anything as far as volatility. As far as speakers, we have the Bank of England's Carney speaking at the Capitalism Conference on fair markets at 9:15 Central, and at 11:45 we have Fed's George, who's a non-voting soft hawk, speaking on payment systems in Kansas City, and that's it. There's a British auction, 5 billion 136-month T-bill auctions. In the UK, actually that's already occurred, and today is expiration for palladium, platinum, copper, silver, gold, June contracts. All right, so very, very light day, very quiet day probably, as we anticipate what will happen in Greece. So let's look at the chart. Let's see what we have for yesterday. Let's get rid of this. All right. So yesterday, again, always reviewing what we expected versus what we got, and this way you can always compare what was said versus what happened, which is not commonly done in our business for some reason. But you can always go back and look at yesterday's YouTube video and see what was expected and see how that played out. But here it is. We review it every morning. We're looking for chop on the open. As I said, on the open, we're expecting fair incentive for both intermediate term players, OTF players, to participate on the long side as well as the short side. So that means that we're likely to have a fairly choppy open, but the overall goal or the overall intent for yesterday, or the main hypothesis for yesterday, was for it to stay below the 2109.75 right up here, this LVN, to stay in the lower distribution, attack 2102.75 to get back in balance, and then the main idea is to test and take out this 97 quarter, which happens to be the low from last week, a day of last week, and it's also the MC point of control. We ended up putting in two lows there. Let's look at that. Here's a 97. Here's a 97 low. Here's a 97 quarter low, and we pushed higher to 22 right on the nose, and then we rolled over and we came back and took it out, which is what's expected. That was a weak low, and it's the MC point of control to be tested from above. Since the high was made, I've changed the composite now to go back to our big balance area, which starts on October 13th. And that composite point of control is at 2088 quarter, which is a key area below us. Right now, we're at one massive high volume node. This is a two-pronged high volume node profile, so we do have the MC point of control at 88, but we do have a very, very prominent high volume node at 94, which we hit yesterday. Below us, we have that 88 remaining. The way yesterday was finished up, so what we have here is the market pushed. Actually, we can see it better on my trigger chart. The market pushed below the prior day's low, popped back in, went to the mid, chopped around for a little bit, kind of sucked in a few shorts here. This looked like a pretty decent setup. We had some pretty good rotations down, and then it basically pushed back to the opening swing low, and then dropped and then pushed through the opening swing, which is what's expected. And then it one ticked the IB high. I did not mention that on Twitter, but I did point that out in the S5 chat room. And it's a one tick failed auction to caution longs. I wrote one tick failed auction at the IB high, caution longs likely to fall through, and it did. It pulled back to VWAP mid, back to the OS, broke through, pulled back to the mid from below, and then off she goes. Pretty good rotation down here. This is an impulsive rotation, so we're looking for a continuation move on a pullback, and it pulled back to the IB by a tick. Very methodical here. Pulls back to the IB by a tick, and then makes a slightly lower low. The expectation is for this. The point of control never shifted down, but there's pretty good volume on the low end of the profile. Expectation is that it would extend itself overnight, and it did. This morning, coming in, we need to pay special attention to this 2100 area. We have an LVN zone going up to 2099.75. The overnight high 2099 and a quarter, and overall inventory seems balanced. I know it's a little bit higher than the close here, but inventory seems balanced. The market really traded a lot on the overnight session below the close yesterday, and broke through to the high side, pulled back up to the prior, pulled back down to the prior high of 95 quarter, the overnight high of 95 quarter, and is holding it, looking fairly strong. So this is likely to attack this 2099.75 into the open. I don't have a clear hypothesis for today. This has done its job so far. It has pushed through to 97. The expectation is that it would be quite a choppy trade today. Looking for a test of that 2102.75. If it can get through 2100 this morning. If it's unable to get through this 2100 LVN, then it's likely to push back down to the open, to the yesterday's close, and to this high volume node, and finish the job that it did not finish down here. Oh, let me change the color of this. Let's make it a nice bright yellow and thick. So expect it to finish what it has not finished here. This is a weak low. So here's the impulsive move, right? This is the move that had some power in it, and it pulls back. Then we expect it to break that low. and to continue lower. By what extent, it depends on how far the pullback is and how much energy or volume has gone into it. But so far, it has pulled down to the overnight low. The overnight low is here, which is lower, and we're currently trading less right here. So this is the line in the sand right here. 2100 is the over/under line. The market's trading right below. I expect it to push, pull back, push through, chop, fill this area in, and then just get stuck here today. That's what I'm looking for as a primary hypo. Not much to drive this. We're going to keep a close eye on the news feed, but overall, not looking at too much happening today. Overall, I still think we continue to 2088. 2088 being the composite point of control. So this is the MC VPOC. Ooh, man, I can really draw with this mouse. Well, that's not spelled right. Anyway, so this I expect it to continue lower here and test this 88 at some point since we're through 97. But overall, the job is pretty much done by sellers at this point. We've brought it back into equilibrium. Remember, the cutoff point for this high volume node started at 2112.50. This 2112.50 was 2113.25, if you recall, at the beginning of the week. So what we did is we moved from this high volume node, broke through the low volume node right here, and then we have started to climb this high volume node, and so the expectation is for it to reach the peak of this at 88. And then on the other side, let's scroll this down, compress it. On the other side, so the way this is shaping up long term is you have one node here. You have one very large node which we've been stuck in for months right here, and then the next node starts below and it goes all the way down to 2019 right there. 2019 below us, and it's important to observe that what we have is basically something that looks like this. And once we get through the low volume node, it's likely to test the next node and the next high volume node, and so on and so forth. So we've transitioned through the 2112. We've held below it, and the next area is likely to be the 2088. If we chop around the 2088 and turn back up to 2012 and take it back, look for new highs. If not, then it's likely to find the path of least resistance, which is 2055. 2055 is expected to bounce. It might bounce for a few days. If it comes back to 2055, puts in a weak low and gets through it, then you're looking at 2045, 2037, and then the next area is 2019, which is the biggest area below. This is the key over-underline in this balance zone starting back in February. And that's the nature of the auction, is to test an extreme, go to the most accepted price, chop around, either come back off of it or fall through it, go to the next low volume node, test it, bounce off, chop around it. If it doesn't bounce off and find buyers, then chop around it, build a little bit of volume, and then break through it again for the next high volume node, over and over and over. And that's what the market does. That's its nature. That's the nature of the auction. And the market does have memory when it comes to price. Don't kid yourself. The market remembers prices even though we roll over. It's something that we see all the time, where we come all the way back up like we did here. We come all the way back up and tag the point of control to the tick from June 22nd, from May 22nd, in the middle of June. After rollover. It's not an accident. It's just we see this all the time. And these composites and stuff are built over months and months, and yet we see these levels holding. So this is the nature of the auction, and that's what's expected longer term. Right now, for today, I'm looking for what happens at this 2100 area this morning when it opens up, and if it breaks through, if we see that there's a high, a higher time frame pushing through it, then expect it to fall back in, fill this low volume node from yesterday, and then target becomes yesterday's high volume node, which is 2102.75. Hope that all makes sense. Looking at, since we're dropping a little bit, looking at the fundamentals chart, you could see that the 52-week lows are turning up, 52-week highs are turning down. As I said before, 52-week highs come into this zone and fall back out. Nothing here tells me that there's a panic or anything. This is pretty controlled. There's some insurance being bought with a put-call ratio rising. There are participants who are buying insurance, and that's why the put-call ratio is going up. But it's well within its normal. This highlighted area here is what's normal for this going back to 2011. This is the normal range, or one standard deviation of the put-call ratio. So nothing to panic about. Not seeing any harsh turns down, except in I think financials were really the drag yesterday. XLF, and then of course XLV bounced up pretty good yesterday as a result of the Supreme Court decision to uphold the Obamacare, whatever that act, Affordable Care Act, and to allow government subsidies, which is good for the healthcare industry. So overall, and these five sectors here: healthcare, consumer discretionary, financials, technology, and industrial sectors. These represent over 70% of the S&P 500, and that's why I track them. I keep an eye on them as well on a quote board, on a separate quote board that's sorted by percent change to see which of the sectors is in control that day. And then I'll sometimes pull up the issues within that, the key issues within that sector, to see what the driver is. But really, all I need is what the chart says, which is price and volume. Okay, so I'll leave you with that. Not much more to say. Good luck today. Again, I'll remind you, do not burn a hole in your pocket by risking too much on a Friday. It's just a terrible way to start the weekend, especially on a day like today where there's really nothing on deck that would cause volatility. Don't get stubborn with your positions. You just never know what news is out there. Holding on to something that has far exceeded its trading parameters when you first put on a trade is just not a wise way to trade. Good luck, and I'll catch you on Monday. Have a nice weekend.